Hello, everybody, and I want to thank you for taking the time to watch this webinar. This subject is one that is near and dear to my heart, very appropriately titled, The Very Viable Long-Term Care Option That Will Help You Land More Prospects and Close More Sales. My name is Jesse Slome, and I am the Director of the National Advisory Center for Short-Term Care Information, shorttermcareinsurance.org, and we're doing this with a partner, Insurance WebEx, and I thank them for all of their support. This webinar will last somewhere between 45 and 50 minutes. I've never given it before. It will be jam-packed with information, and we will ultimately have a recording available for you to watch. I will go through things very quickly, and I apologize for that, but as I said, my goal here is to give you a lot of real information that you can use and put into practice. So let's begin. There we go. We figured that button out. Okay. So, long-term care insurance, and that's why I say this program is really going to focus if you're an LTC producer, but it's applicable for anybody that's targeting the senior market. You are well aware of what's taking place today in the LTC marketplace. Sales are definitely declining. They continue to decline, and while we have not seen 2016 numbers, I predict they will be lower than 2015. And linked benefit sales, while they are the new darling of the industry, they really do not grow the market. They are just taking away market from traditional LTC sales, and they are driving sales to financial advisors and others who have access to middle income and affluent clients and are finding this as an easy solution. But the bottom line is consumers still want to plan. They want to plan for long-term care insurance, and they don't know what their options are. And they particularly don't know that short-term care is a viable option for many people. And I do not know why my slides have changed. There we go. I apologize for that. So what I'm going to do is take a minute to define exactly what short-term care insurance is so that you have a general understanding. Short-term care insurance, or it's often called recovery care insurance. I've added the name short-term care insurance very simply because consumers have never heard of recovery care, and if you're trying to market something like that, you're going to face an uphill battle trying to convince them to even talk to you about something they've never heard of. Short-term care insurance can, and each product is very different. It can provide coverage that you're very used to, home health care, skilled nursing home, even assisted living. The benefit periods must be less than 1 year, so typically up to 360 days. And I know that one of the barriers that long-term care insurance agents specifically face is that they feel that's not sufficient. I'm going to explain why it can be and why it's something that I ardently believe is applicable for many, many individuals. Long-term care regulations typically do not apply. So this is not tax qualified. This is a totally separate type of category. And market penetration is still small. By comparison to LTC, annual premiums are somewhere around 75 to 100 million, though I will say that sales are growing significantly. Short-term care insurance is a senior-oriented product. As you can see from this slide, we study the carriers that are in the industry. 91% of buyers are in their 60s or older, and this is an ideal product for seniors. It is an ideal product for prospects, and I categorize it in the following way. They can't, they won't, or they waited. And I'm going to explain specifically who those people are. These are long-term care insurance prospects who can't get anything else. And if you've been in this industry, or even if you are dealing with seniors and you've read a little bit about LTC, you understand that insurers today are being far harder on the clientele, the prospects that they will accept. Underwriting, because there are fewer insurers in the industry, they can be, and they are, far more selective. So this is old data that shows that people in their 60s or 70s, as many as 1 out of 4 to 1 out of 2 are declined. So People today who want coverage, you know that they're too unhealthy. They're not going to meet the standards for long-term care insurance. They can get some short-term care coverage. And I've listed just a couple of here in talking to some of the agents who are very successful with short-term care, just a couple of conditions that you're going to run across where a person can apply and be approved for STC coverage. Diabetes with arthritis. I mean, you can read them yourself. Osteoarthritis. There's even a home care policy for those who have memory issues. They won't pay the cost. Everybody knows that the premiums for traditional long-term care insurance go up every year. And I'm not talking about going up along with the age of the applicants. I'm talking about a 65-year-old today, and these are 2017 numbers, so they're very current. A 65-year-old female who is in okay health, where, you know, and acceptable, buying a 3-year policy, $150 a day daily benefit, is going to pay $4,100 a year. That is a lot of money, especially if you're dealing with a single female individual. So they will not pay. Consumers are being hit by sticker shock when it comes to LTCI, and that's why the market continues to shrink. But they still want coverage, and they find that short-term care insurance can be a very affordable and a very attractive situation. I've run just 2 little samples. These are real illustrations that I just ran. So let's look at, and you'll see one of the things here, one of the good things is these are unisex rates still. So let's look at a male, age 65, buying $150 a day daily benefit, 360 days of benefit period, a 0-day elimination period. We're going to focus on that in a minute or two. $900 a week for home care for a year. Annual premium, $855. Female who wants just really a home care coverage and some very, very limited, almost none, nursing home coverage. $1,200 a week of home care for a year. $888 for a female. So again, short-term care, they won't pay the cost in many cases for LTCI. They do find short-term care affordable. Now, one of the objections that I get raised by people who've been passionately trained and passionately selling long-term care insurance is, well, a year's worth of coverage is meaningless. It is certainly nothing, you know, we need to sell people 3 years, 5 years, lifetime, you know, coverage. And I understand all of those paradigms, but these are the real facts. A significant, I won't call it the vast because it's actually a little bit less than half, but a significant number of people who go on long-term care insurance claim, their claim lasts for 1 year or less, 41%. And if they're needing care at home, as you can see, it's even greater. Now, claims that last less than a year, they last a short period of time because a percentage of people have a short recoverable illness, so they go on claim and then they're off claim. Or they have a sudden terminal illness, so they go on claim for a period of time and then they die. And so while many people, there's nothing ever wrong with selling people 3 years of coverage, 5 years of coverage for long-term care, the reality is if people have no coverage, they have no protection, basically. They're taking on all the responsibility. So at the end of the day, I am a believer that some coverage is always going to be better than none. And since many claims last less than a year, short-term care insurance is indeed a very viable and an applicable solution for many consumers. Now, people waited. That's the third one. They're too old. I mean, we just literally before I started this webinar, I had a call from a woman who was in absolute shock that she could not buy long-term care insurance for her 80-year-old husband who was currently in a nursing home. What kind of system is this, she said. And this is not unusual. Most people wait. It's just natural. You could do everything we want in terms of educating them, but people wait. what the cutoff age for long-term care insurance is, and you all know that at older ages, it's going to be almost impossible to health qualify. So these are 5 leading short-term care insurance carriers, and you can see their issue ages. In one case, up to age 89 with no medical records. So if you are dealing with older clients, this is a very, very viable option. And so a recap before I start getting into some specifics. Why is short-term care insurance a viable option if you sell long-term care insurance especially, and if you don't, even for your senior clients? 1, it's an affordable option. You have the ability to go into people who have the perception that long-term care insurance is expensive and kind of shatter that myth and say, no, there is an affordable option. It's easier to health qualify for. This is going to range from one company to the next, but in some cases you're going to see, and one case that we're going to look at today, how easy it really can be to health qualify for. Unisex rates, I don't know how long this will last or if it will ever change, but unisex rates make this policy extremely attractive for you, especially if you're dealing with older women on their own. Older ages are accepted. I explained that. Fast decisions, that's something, something very nice. Some of these carriers will not just take apps over the phone, over the internet, et cetera, and I'll explain a couple of options there, but you can get a decision done. Why is 360 days of benefit better than just good? I always have advocated for what I call the good, better, best approach to helping people plan for long-term care. It's better than just good because many claims, as I said, are 1 year or less. And here's a key one that you'll see. I use a little image illustration on the right. Short-term care insurance policies do not have the 90-day certification that's built into long-term care insurance policies. What does that mean, and why is it so important? Everybody understands, consumers and agents, when they're talking about traditional LTC coverage, that there's an elimination period. And we've done a very good job of educating clients and agents to the fact that, well, you pick a 90-day elimination period, that's what the vast majority of people pick, and that is the time when you're self-insuring, and then you go on claim. And so people look and they go, okay, so I have to take responsibility for 90 days. But that's only one set of hurdles. There's a second set of hurdles. And we talk to consumers, again, all the time who have never been told, never been made aware of the second set of hurdles. And that's the importance or the need to meet the 90-day certification. In many cases, people who have a long-term care insurance policy are not going to meet the 90 days certification period, meaning that they're going to need care for 90 days or longer. And so even after they've met the elimination period of 90 days, they're not going to qualify for benefits. And there are very many common situations. Today, if you get a knee or a hip replacement, you go into the hospital, the procedure is done, you then go into rehab, you might be there for a period of 20 days where Medicare will pay, maybe a few more days, but then you are done. And the doctor expects you to be walking and ambulatory within 30 days. You're never going to meet the 90-day certification, but guarantee you many people who've been selling long-term care insurance have used the words, oh, this is the type of care that you're going to need. You see so many people who get knee and hip replacements and they have this and they have that, etc. So this is a real important benefit. Short-term care insurance does not have the 90-day certification. And why is that important? It means that your consumers, your prospects, and ultimately your clients are going to get access to care faster and sooner without having to go over those left side hurdles. And this is, again, especially important for older women, because if you think about it, if you're a married couple, you have a built-in caregiver. You have somebody, your spouse, who's going to provide care for you for that initial period of time, and then the insurance kicks in. But if you are on your own, whether you're a man or a woman, but typically we tend to talk about older women in this case, and it's a way for you to communicate and to sell it. You don't have that built-in spouse. You're going to need care right away. That's why it's a real plus with short-term care insurance, and something why I really believe that more agents should be communicating this and selling it. So for the rest of the presentation, I'm going to look at 3 specific companies: Kemper, Aetna, and Standard Life. Each has a very different policy. I'm going to rapidly go through them all and some of the key benefits. If you, now all of these products are not approved in all states. They all have listings of states available. If you currently work with a general agent, an FMO, and you are appointed with these companies, well, then you should be talking to them about, getting more information on the products. If you are not appointed with a general agent or an FMO, you can, at the end, I'm going to give you our number. You can call us. We'd be only too happy to get you up and running with any of these 3 companies. We'll tell you if they are available in their states, and obviously get you started and help you out. Kemper's home health care insurance plan. This is, and what I put in there is, why do agents love it? Especially LTC agents who are selling quite a bit of this product. So this is, you can hear from my sigh, this is a different product than what I would call true long-term care. But it's very suitable, and it has a real place there. First, it's a great prescription drug reimbursement benefit. And while some of you may be rolling your eyes and say, who cares about that? Trust me, there isn't a senior in America today who isn't facing large prescription drug bills and costs. And when I show you some information on this, you're going to see why this is what I call sort of a no-brainer, especially in certain states. There is a home health care benefit that can provide some value. It is de minimis compared, but let's go to point number 4, which is there are basically 4 underwriting questions, 5 questions in total, 4 of them related to underwriting, and if you can answer correctly to those 4, you're basically 98, 99% assured of being approved. So this is an ideal product when someone has difficulty meeting the standard health qualifications for long-term care insurance. It is an ideal product when you have a couple and one person can health qualify, one person can't, and you're going to lose them both. It's an incredibly easy product to sell. I mean, in an old world, there's basically a 6-panel brochure. The 6-panel brochure lays out everything about the product, including the rates. It's as simple. They can get it all onto these 2 sides. I explained here basically the home health care questions. Do you have any health insurance, including home care? Yes, no. Are you looking to replace? Are you currently living in a nursing home or assisted living, or currently receiving home health care or similar type benefits? Are you physically unable to perform routine ADLs? And do you acknowledge the receipt of outlines of coverage? I can't imagine any other sale that could be simpler than this, and ideal for someone where basically the agents who are selling it are telling, listen, Mr. and Mrs. Jones, one of you will be able to health qualify. For the other, I'm telling you, you will not be able to, but this is a good plan B. And here's why you will love it. So I pulled 3 rates. But I'm going to show you, and I haven't talked about the benefits yet, I should, in more depth. But this is what I want you to remember. This is for the home health care benefit, so the base plan. Look at the rate for a 65 to 70-year-old. The annual premium in North Carolina is $169. $169 a year in North Carolina. In other states, it's going to be $300, $400. But remember that I said this is a prescription drug ideal benefit for people who take prescription drugs? So, two things. Remember this line, and then I'm going to show you those premiums. I'm going to go back again to remind you. Those premiums anywhere from $169 to $434 for a 65-year-old. Now, if your client takes prescription drugs that cost more than $300 a year, and trust me, most people, these are the top 10 drugs by Medicare enrollees, most seniors are on multiple prescriptions today. And here's what some of these common drugs cost. Okay, they're costing them hundreds of dollars a year, and seniors know that. If you have a client that is taking prescription drugs, the Kemper Home Health Care drug benefit, there's typically a $50 deductible, there's an 80% copay, and again, it all varies by state, so I'm giving generalities. You need to find out what's specific in your state. But this will reimburse up to $250 maximum per policy per year. So, North Carolina, agents end up, if they're in North Carolina, they buy this first on themselves because they can't believe it. A consumer in North Carolina is going to pay $170 a year. Their maximum drug benefit, we haven't even talked about anything else, $250. Georgia or Alabama, they're going to pay $339. Maximum RX benefit, $250. Even if Medicare pays. The way Kemper does it is very simple. There is a form, and in fact, we had this form created because it's as simple as that. All you have to do is submit the pharmacy receipt or a detailed list from the pharmacist with the date purchased and the cost for each drug. You submit it all at once or periodically throughout the year, and individuals can buy 2 of these home health care policies, and we'll explain why that can be a good idea, and they can get the maximum for each. So basically, you pay for a prescription once, you're submitting it twice on the 2 policies, you're getting reimbursed for it twice. I'm going to leave my comment as there. I'm not even going to put a pregnant pause. I've added these words. This is actually how the program works. Now, I talked about the prescription drug, but I said, okay, so that's a key one, because basically if you're taking prescription drugs, you're getting back either all or a significant amount of the premium that you've paid. There are other benefits that this product has as well that's included. There are home health care benefits, okay, and again, these vary from state. They are basically for therapies that are provided in the home. Now, most people today get their physical therapy, their speech therapy out at a facility, but they would, if they could, get extra care or extra treatments in their own home. And this policy allows that to take place. So it is really an added plus for a client who understands that, hey, if you're needing some speech therapy or some physical therapy, especially after, let's say, you've had that knee or hip replacement, you don't want to or have the ability always to go to the local, physical therapy center where it's going to be covered. So you're going to want to have somebody come to your own home, and this policy will do it. There is also a home health care aid benefit. Now, I explained that it is de minimis. It's a daily benefit of $40 for each day. That's not a lot, but it still is better than nothing, and goes back to the health questions where people can't get anything else. $40 a day is better than nothing. So just a quick piece of information so that you have a little bit more. The physical therapy is applicable for someone who's experienced any of these conditions. And the average hourly rate for physical therapy at home ranges from $31 to $57. So basically, that daily benefit that you would get would pay for that treatment at home. And that's a significant benefit because, as you know, people want to they want to get that care in their own home. And a reminder that you can sell two Kemper policies to the same individual. Each is a separate policy. Each reimburses for the same benefit. No coordination. So, I know many of the long-term care agents who are doing this will sell people two home health care benefits because that way you're basically getting $40 a day plus $40 a day, for 20 days. And so, especially again with the prescription drugs. So they're able to offer this as a good, affordable option. And so finally, overcoming some of your objections to what I'm just talking about here. Here's what I hear from many long-term care agents. I won't sell this because 60 days is not enough. I won't sell this because 40 days is too little, and I understand. So here's what I say to you. I won't sell this because 60 days is not enough. 30% of home care claims, these are home care long-term care insurance claims, assuming that there would be a zero deductible, are less than 3 months. So 60 days is basically 2 months, more or less, if care was needed every day. So for many people, this is going to be all that they need. And again, it's something that's, something is better than nothing. Most claims in long-term care insurance are shorter than you believe. We have looked at the data at the American Association for Long-Term Care Insurance. We have not released it because if consumers really saw how short many of these claims were, it would go against all the thinking about buying insurance. Now, some claims are going to be long, and that's always the reality. But that's why I still believe that if most people do nothing, they have total exposure, 100% exposure, and no alternative, obviously, than to pay themselves. And I won't sell this because $40 a day for home health care is too little. So sell them two Kemper policies, which equals $80 a day. And again, remember, this is a policy for those who will never qualify for traditional LTCI, one with just basically 5 questions for them, kind of health and utilization related. So some coverage is always going to be better than none, and this is a really good policy for that. Again, if you don't believe it, get yourself a copy of the brochure, of the application, and look at the questions. Aetna. Aetna is the second company that I'm going to focus on, and I'm going to discuss why agents love this. First of all, it's a way to sell a home care only benefit. This is the Aetna Recovery Care series, and as we are basically preparing or doing this webinar, Aetna will be launching a new home care only product that will go alongside of this. They also have an older home care only product, and in some states they even have a standalone skilled nursing home policy. But I'm going to focus on right now the Aetna Recovery Care policy, because this is, I would say, most akin to traditional long-term care insurance. But if you are not appointed with Aetna, you really need to consider learning more and talking to us about getting appointed with them, because I think this is a product that you will really find a high degree of consumer acceptance for. So their recovery care, or what I will call their short-term care product, provides home care, assisted living, skilled nursing home. It is an indemnity product, cash, unisex rates, no extra cost for monthly premiums. Okay, basically you look at the annual rate, you look at the monthly rate, you can quote the same. And you can max the policy out, which basically, if you do that, you could design it in such a way that it equals 2 years of benefits. Oh, yeah. And I almost forgot to tell you. Remember that slide earlier on where I said there's companies out there that will issue policies up to age 89? This is it. Issue ages 50 to 89, no cognitive test, no medical records. So what is this policy? Just quickly in a nutshell, there's options and benefits that I'll kind of show you in a second. They have a great online system that allows you to really run illustrations and do it. But there's a couple of basic components. So there's a daily nursing facility benefit, including ALF. It's up to $300 a daily benefit, cash, up to 360 days of coverage. There is a daily hospital indemnity benefit. Now, this is how the policy is filed, and so it's an option if people want it, but you have to have some daily hospital benefit, but it can be as low as $10. And when I run illustrations for LTC producers, I'm going to show you, what that really, that adds $1 or $2 to the premium because you're really selling the home health care and the nursing home. Home health care is added as a rider. It's up to $1,200 a week, cash, indemnity. It's for 3 or more. You need 3 or more home visits of 1 hour or more. It really is an outstanding benefit that agents like. There are it's a more detailed application than obviously the Kemper one. This is more like a long-term care. There will be some underwriting, except underwriting is I would say rigorous, but not quite as rigorous as traditional LTCI policies. Here's what you're really going to like. I'm using the word recare or recovery care, but it's really the Aetna short-term care product. Once you are appointed, they have an incredible online support system and online access where you're able to run quotes, play with the numbers, see everything about it. So let me give you some real examples. This is, as I said, I'm doing some screenshots off their own website. So we click Recovery Care. We're looking, if you look on the left, we're taking a daily nursing benefit of $200 a day, 360-day benefit period, a 20-day waiting period. Now remember, I said you must have some daily hospital indemnity benefit. I put in $10. Most people are not going to need their hospital indemnity benefit. You're talking to them. They're going to have Medicare, Medicare Sup, etc. But you have to have something, so you put in a de minimis amount. And then I've added a home care benefit. $900 a week for 52 weeks. Basically, as you can see, for a 70-year-old single woman on her own, $118,000 of potential benefit for just under $300 a month. This is for a 70-year-old single woman. I'm going to continue because I really believe that this is an ideal product for older individuals. And so we've compared this against a 70-year-old traditional long-term care company. And just to show you the difference, if you were going with a traditional LTCI policy, and again, we support and believe that agents should sell what's in the best interest of a consumer and what they're able to get, what they're able to afford. But the significant benefits of this short-term care policy are still significant benefits for a lower premium, and that's ideal for a single woman because of the unisex rates. Now, there is a way to sell recovery care as home care only. And again, we have not, the Aetna is coming out with a new home care only product that is rolling out basically in January, February of 2017, if you're watching a recording of this. But what some agents have been doing, long-term care agents, where they have consumers who want just a home care only policy, is basically, look at where I have the red arrows, they've selected a daily nursing benefit of $10 a day, a benefit period of 90 days, and a waiting period of 100 days. That makes the nursing benefit de minimis. The daily hospital indemnity, still at $10, that's the de minimis benefit. A home care benefit of $1,200 a week times 52 weeks, which basically equates to about 7 hours of care a day at a $25 an hour rate. And remember, this is an indemnity policy. If the person uses less care than that, they get to keep the cash for future care. Premium for a 70-year-old woman, $107 a month. So again, many agents are finding the Aetna recovery care, the Aetna short-term care policy, as an ideal way to sell to individuals who want a home care only. And let's look at what this means for an 82-year-old single woman. Now, I always believe that there's always price points. So you could do a higher weekly benefit, but suddenly you start, the more you offer, the more you price. So let's say you had an 82-year-old single woman who wanted some home care benefit, and her budget was about $150 a month. Well, here's what you're able to offer. $900 a week times 52 weeks. It's about 5 hours a day of care, reminding the person that if they use less care in a day, wake up and tuck in service, as I often call it, a couple hours in the morning, a couple hours at night, they're able to keep the cash for future care. A very sellable proposition at a very affordable price. A couple of reminders. So, lastly, here's Aetna is making the news as we're doing this today, and I guess this slide will have to change because the government has just turned down their request to merge with Humana. But Aetna remains one of the nation's leaders in healthcare. They're certainly one of the leaders in Medicare supplement coverage. So when you're talking to seniors, they will know and recognize the Aetna name as a high quality, well-established, highly rated player. And so, again, Aetna has an older home care policy that's ideal for long-term care insurance agents, and many of them are using it to fill the gap in the elimination period with some of their, either some of their new clients, or typically they're going back to older clients to sell it. And as I say, they are coming out with a newer policy, and we'll be doing training on that as well. The third company, and I know I am shoving a lot of material into a very short period of time, and I thank you for watching, but I want to make this as valuable for you as I possibly can. The third company that I'm going to focus on is Standard Life and Accident. This is an A-rated, Texas-based company. They have a policy, Recovery Care 2. It's been around for a long time, but I think that there is a particular niche for this product that I want to bring to agents' attention. And the niche is older women who are on their own. And that's what I call it, older women who are alone or on their own, which means they were widowed, they're divorced, they're single. There are a significant percentage of women who are 65 or older who are widowed, divorced, or single, or know, if they're not currently, that they expect at some point that's a real likelihood. And the issue is they need long-term care planning more than anybody, but they have a real problem. They actually have a couple of real problems. First, these older women have lower income. If they have lower income, they're not going to be able to afford to plan for long-term care. Certainly, they're not going to be able to buy long-term care insurance. And the other problem is, is traditional long-term care insurance or even linked benefit products are more expensive when you're a single woman. So you have the whammy of you're going to need something like this. You know you're going to need something like this. You don't have the money to pay for it. And even if you have some money, you're going to face really high premiums. So last year when I prepared this presentation for something else, we just ran illustrations. I guarantee you the numbers are going to be higher today in 2017. So a standard single woman, age 65, buying what I would call a good middle-of-the-road long-term care insurance policy is looking at anywhere from $300 to about $400 a month in premium. They just, you know, if you have lots of women on their own who can afford $300 to $400 a month to buy long-term care insurance, I hope you are selling them, all of them, because they will gain benefit from this, because something like 2/3 of all claims from long-term care insurance are paid to women. But the reality is you probably don't have a lot of women who can afford $300 to $400 a month. So short-term care insurance is a very viable option for them. Let's talk a little bit about the Standard Life Recovery Care 2 policy. You can read a lot of this on your own, so I don't have to cover it. Doesn't go as high in terms of issue age as the Aetna policy, but it certainly is ideal. It provides nursing home, assisted living. Home care is an optional rider. There is some pros and some cons to how they handle it, but again, it's better than nothing. They're unisex rates. This I cannot emphasize enough, and we're going to show you some examples. This is ideal for women who are on their own. There is a 20% preferred health discount. That is significant, especially at younger ages, because you do have women who can health qualify. There is an inflation growth option, and wait until you see the rates. And this is a plus. No product is perfect, but if you're selling to somebody who's 65 and you want to include inflation growth, and you should, because certainly they're not going to need care for another 20 years, wait till you see the rates for this. Again, pluses, no 90-day certification for the benefits, and they will restore these benefits, you know, multiple times up to the maximum. So, you know, I won't again read through everything, but some highlights here. Excuse me. There's basically a daily benefit minimum that goes up to $300. You pick the lifetime maximum benefits. You can have an elimination period of 0 or 20. The inflation is at 5% still. As I said, this is an older policy that has not been tweaked in terms of provisions or rates. That's sort of a good thing. There is a preferred underwriting discount to 20%. There is a spousal discount of 10%. And they will even do small groups and offer a list billing discount. So let's compare a couple of real examples, okay? And again, in my mind, for a single woman on her own, or for any client, the magic price point is $100 a month. That's, you know, if you want to sell people and get them to do masses, and companies like Genworth and others have done all kinds of research and found that the magic price point, if you want to get more consumers buying long-term care protection, is $100 a month. So, just coincidentally, I ran 3 illustrations, okay? Here's the Standard Life on the left. Daily benefit, $150 a day. Benefit period of 360 days. The home care benefit is only 75%. Elimination period's 20 days. Inflation, 5% simple. Voila. Premium, basically $100 a month. You look at another short-term care policy with very similar provisions. Now, definitely a richer home care benefit. If you are stuck on maximizing the home care benefit, well, then the Standard Life policy, you're going to find that that's going to be, a negative that you're going to look at and say, nope, I'm definitely not going to sell this policy. But I look and go, it goes back to my belief that some coverage is always going to be better than none, especially and that not everybody will need the maximum care. If you compare this to another short-term care policy, you look at the premium at $2,000 a year. And if you compare it to a long-term care carrier that's offering a one-year policy with 50% of the daily benefit as home care, their cost is twice this. So I look at the Standard Life policy for a single woman 65 or older in preferred health and say, when you reach age 85, a time when you're most likely to need care, your coverage has grown from that $150 daily benefit to $300 a day for skilled nursing home, $108,000 maximum. It's grown to $67.50 for assisted living and $225 per day for home care for $100 a month. That selling proposition is why I look and say, I think the Standard Life policy is a really good one. Let me tell you one other thing that some agents will balk at this until you read what I've put down in the purple reverse box at the bottom. They really make it ideal for agents who are selling, especially those who are selling over the phone and internet. You sell the concept and the plan amounts to your client. You conference in the Standard Life home office person on a toll-free number, and their staff will complete the application over the phone. You can stay on the phone, or you can just look and put the two people together. Now, at first, a lot of agents, especially, I would never let somebody else do this, and keep harumphing, guys. Half of Standard Life's final expense sales are made this way, with their people closing the sale. And I will tell you, our phones ring constantly from consumers. They are skeptical about talking to insurance agents. They want to talk to company employees and home office employees. I will tell you that, in my opinion, your ability to say, listen, I'm going to give you this information, but then I'm going to put the company directly on the phone with you. The company people are responsible. This is what they do. This is a big company. Their staff is going to answer all of your questions, help you with the application. They are salaried people. Let's put the two of you together and let the process begin. In my opinion, this is a key plus that will help you close more sales and not spend a lot of time. Oh, yeah, and a few final pluses. They accept credit cards. And I'm not sure. I know I'm not alone in the world. I love points. 55% of credit card holders redeem points for cash, and 26% redeem them for gift cards. Imagine you're able to buy this, and you're able to get some points for doing it. I love that about it. So, where can you get everything that you need to be successful selling short-term care insurance? And I'm talking about state approvals, product and marketing support. If you're appointed with a GA or an FMO, boy, I hope you will beat up on them and say, why did I have to go and hear from Jesse Slome to get my training on this? I'm already appointed with you. Why aren't you guys, getting me all excited about these products? If you are not already appointed, especially today we've talked about Kemper, Aetna, or Standard Life. There are a few other carriers in the industry. You can contact us. The phone number is right up on your screen right now, 818-597-3205, or you can send an email to Mindy at Short Term Care Insurance. I know it's a lot to spell out. Mindy at shorttermcareinsurance.org. First, tell us the state that you are in. I will tell you that there are a few states where there are no short-term care insurance policies. California, New York, Florida, Minnesota. The state of Washington, I think, is one. Now, new products are being filed and approved, but the first thing to do is the Northeast is a tough state, but even Connecticut has now passed some regulations that they are looking, that they've kind of approved it. Now they have to work out all the details. So the first step is tell us what state you're in, and we will let you know if there are products available. And as I say, if you're ready to start selling these or get your feet wet selling them and you're not appointed with these companies, please do call us. We will be only too happy to help you be successful and get you started with these companies. So I want to thank you for watching. I hope that I've given you some really good ideas about why the short-term care insurance marketplace is starting to boom and how you can benefit yourself and your clients. If you're ready to get appointed, the phone number again is right up there on your screen, 818-597-3205. That's for the advisory center. And as always, I want to thank our partner, Insurance WebEx, for notifying so many insurance agents to watch this. You can visit their website to access recordings of this and hundreds of other great webinars for insurance agents. And again, thank you all for watching today.